Have you ever struggled with finding the right entries and second guessing your exits or getting caught in false breakouts? I'm sure most of us has, but that's where indicators come in as a tool to enhance what price action already tells you. And in this video, I'll show you how to use these indicators on top of the price action the right way, therefore helping you to confirm your setups, avoid your weak trades, and sharpen your execution like a pro. So price action alone gives you a deep insight into market structure, trends, and momentum, but sometimes it's not enough to filter out the noise or confirm your trades with confidence. You know, price action is already a powerful strategy, but when you use indicators on top of it, you will take your edge to a whole new level. And in this video, I'm going to show you how smart traders refine their edge and exits with precision. Without further ado, let's dive into it. So here we have the raw chart with only the price action and nothing else. And when you look at this chart, you are actually able to, with your eyes, to read some of the price action here without any problems. Like you can see here, there's a big drop and then actually comes a double bottom and it goes up again. And also over here, you can see that after a downtrend, it changes the character and the structure and starts to build on an uptrend. So the raw price action in itself, without even volume or anything else, is actually possible to both read from and to trade from. But putting the indicators on top of this actually gives you an extra advantage. All right. The first thing I would do normally if I was looking at the chart is I need to have the two moving averages that I use, namely the 20 moving average and the 200. Because with these two moving averages, I actually try to see where am I in the price, where am I in the phases and the area. So let's try and put those on so we can see. Here you can see that price currently is in a very sharp uptrend, and price is above the blue line and the red line, the 20 moving average, the 200 moving average, and therefore you could claim that the price is in a really strong uptrend. But the further away price comes from the red line, and also if price comes away from the blue line, now you have double space or dual space, and then I would actually be looking for longs. This you wouldn't really be able to notice exactly if you were not using these two moving averages. Some people even put on the 10 moving average in order to filter even more on the 9 moving average. But the 20 and the 200 are the two main components for me, because as you can see here, it also shows when price catches the 20 moving average catches the price, and thereby, how do you say, goes from a downtrend, in this case, to an uptrend. So these two moving averages are very, very key to have. All right. On top of that, I also use some other indicators, but I use them mainly on the bigger time frames. What do I mean by that? Well, I normally go for the 30-minute or the hourly or the 4-hourly or even higher. And the ones I use, I will find them here. If we go to most popular, I will use the MACD and I will use the stochastics. Now again, you cannot rely on the indicators alone because they are lacking. So you need to use them like if you're doing a jigsaw puzzle and put in the pieces in order for you to say, well, if I have something in the puzzle down here and something in the puzzle here, what does this mean to me? For instance, you can see the 30-minute chart here. You can see the price on the 30-minute chart is more or less on top of the 80 line all the time. Also, if I go to the hourly, you can clearly see here that it's more or less just going sideways above this 80 level. And as long as it's doing that, you just have to realize and consider that price is in a very strong uptrend. It has to break out of this area of the 80 area and down before we can say that now we're going to get a change in the trend. Like over here, you have the breakdown, and you can see now the stochastic just breaks down here and also breaks down here and also breaks down here. So in this case, you could say, well, now I have an extra indicator to show that Plus, if I look at the MACD, I can also see as long as price is above the zero line, it gives me an indication that now whenever there's green momentum, that means momentum for the upside, when price is stronger for the upside, I will tend to bend on the upside, even though, for instance, here that price is still underneath the red line, but currently over the blue line. And now you can see over here that price actually gets above both of the lines, and therefore the trend is actually even stronger. All right, so these two trend lines plus the MACD plus the stochastics gives you even more help to place your entries and your exits. But in the next segment, I'm going to talk about what you can even add more. I just want to take a few seconds to thank my broker for actually very good, excellent customer service. And if you appreciate that like me, and also tight spreads which are fixed, if you also appreciate negative balance protection, and if you also appreciate the benefits of single currency trading, I suggest that you sign up with my broker at the link that you see in top. And you can also see it right here, and I will also provide it at the bottom of this video in the description. But the cool thing here is that if you complete and fund your account, you can contact me, and I will offer you, which is only valid 30 days from launch of this specific video, I will offer you 1 hour of free price action trading teaching. I will also offer you 1 hour of free trading psychology and 1 hour of free demo live session, plus of course 1 hour of live trading session. And this will be done by Messenger, Skype, Zoom, or whatever contact method it is. So go sign up through the link in case you want to have a very good broker like me. Alright, so in the second segment we will talk about what we can add more. And if I do like this, ring, now you can see we actually have some examples that I put in here for us. I will go back to the 15-minute chart again because this is really good. Here we go. So one of the very key simple things you can use on a 15-minute chart is actually the trend lines. If I put a trend line on the lower points here from this trend over here, I will try and zoom in so you guys can see a little bit better. Here we go. If I connect the low points in this area, then by the time price breaks down from the trend line, I will be looking for confirmation that now this trend line becomes resistance, and this is exactly what happens here. And I get a color change and I get price underneath the blue line. So now price is first of all in a phase 3, going very close to a phase 4, underneath the blue line, far away from the 200 moving average. So you see, I'm putting the puzzle together piece by piece in order to read more clearly what I see. And this trend line, you could also actually use it. You can see there's other examples like here. If we connect these bottoms here, or even if you go over here, I can just draw this one over here like this. Now you can actually see that this bottom area, like this, connected with this bottom area, gives you this possible bottom today here at the market opening. And this is exactly what price did. So it actually did the third touch, or maybe the third touch was there, the fourth touch was already there. So the trend line can actually help you in order to see these very key level area of when to exit and when to enter. All right, so besides trend lines, we have more things to help us. We can use these rectangles here, so we can draw in, so we can draw in support and resistance area. And support and resistance area are of course not areas that are completely fixed forever, because if there were, price would only bounce in a small area. So these areas gets taken out. And as you can see here, price goes down, takes it out, touch a double bottom here, and also up here in that level, if you draw in the box here, you can see in there, from previous resistance area, price goes over resistance, but turns around immediately and goes down. So this is what we also call a fake out, or in this case it will be a liquidity sweep, because it simply takes out all the stops from the top and turns down. So here you have another way of helping you to put the puzzle together. After we have the downtrend here and price starts to move up to the blue line, I will be aware if price can consolidate above the blue line. So when the first retracement comes, what I would do is I would just measure it with a Fibonacci tool. So if I connect the bottom to the top, I can see that it actually sticks its nose directly at 50%, and the body of the candle even stays at 38%. So this is a very good entry as soon as you have a color change. Or you can even just actually enter from the zone itself with a stop underneath it. Also, if you take the next move, now when price changes the structure and the character of how it's moving, you can see that in the next move from bottom to top, you can see that price actually again stops with the 38% level when it comes to the candle and the candlesticks, and then it continues further up. So the Fibonacci tool on top of this, with the blue line, with the red line, with the price action, also tells you and helps you to make your entries and your exit more precisely. So you see, when we combine all these things together, the price action in itself gets even stronger. But just remember that you cannot rely necessarily on just the indicators itself. And to be completely true, you can actually work with just the price action and the 20 moving average and the 200 moving average and then the price action. The indicators in itself is only to help you to get better reading of the chart. By the way, if you actually also like price action, or if you're new to price action, go check out this link I put in the bottom of the description and you can see more price action videos.